So over the last year, the S&P 500 index, which we're going to use SPY, the ETF, has pretty much taken a straight line up since the COVID crash that we had in March 2020. But now, since the beginning of September up to now, which is, beginning of October, we've started to see a little bit of a pullback, and that's made some people nervous, which is natural because a lot of people are newer to the markets. And for those that have joined in the last year and a half, pretty much have basically just seen them only move upwards. So a little bit of a pullback makes people nervous, which is natural. But that natural question that comes with the pullback is how low can it go? So if we take a look here at the last 5 years, we've analyzed 6 different pullbacks in the S&P 500 that we're going to take a look at and then compare to today's pullback that we're seeing to see what the equivalent pullback would be. So moving back into the last 180 days, we peaked at 454.53 on the S&P 500 and it closed at 433.10. So that's a 4.61% drop over a 33-day period. So let's keep that in mind as we look at the next 6 pullbacks over the last 5 years to compare that and see where we would end up if we extended that drop to what's going on currently in the market. So the first one that we're going to look at here and zoom in on is going to be on October 12th, 2020, which we have right here. And that's when the S&P 500 peaked at 354.02, dropped down to 322.60 at the base, which is an 8.88% drop over just an 18-day period. So, that was a relatively rapid drop because as we discussed earlier, our current drop that we're seeing in the market has lasted 33 days so far. But the equivalent of that would be if the S&P 500 got down to $413.75. So if we go back to the 180-day chart, that's the equivalent of the S&P 500, if we switch our drawing tool really quickly, dropping to $413.75. So right about here is where that equivalent drop would be. And that's a price that we really haven't seen in the S&P 500 since, June and a little bit into May. So it's not completely out of the question because that's not too long ago. But that would mean that there's still a 4.47 drop remaining to go. A pullback that would suggest, hey, don't get too comfortable buying at these levels yet because we have a little bit of ways to go. Now, if we go back to that 5-year chart and look at the second instance that we highlighted, this one started in September 2nd, 2020, which is exactly a year ago to the day that the current pullback started, interestingly enough. And in that instance, it peaked at 358.75, dropped all the way down to 319.80, which is a 10.86% drop in a 22-day period. And you'll notice these first 2 instances that we've talked about have been quicker than the current pullback, being at 18 and 22 days. And then the S&P 500 equivalent for that one would be 404.75, which we could draw right about here. So a little bit of a bigger drop than what we saw from last October, but I know still one of those things where if we extrapolated the move on that drop on a percentage basis to what we've seen lately in the market, there's still a little ways to go, and that would get you to a price level that we haven't seen since about May and April of this year. So again, not out of the question. Let's go back to that 5-year chart and take a look at the third instance now, which is the COVID crash. So this is a little bit of an asterisk here because I doubt we have that type of a black swan event. Really, there are only 3 big crashes in the last 20-ish years, being the COVID crash, the crash in 2008, and then the dot-com crash. So typically those are spaced out about 9 to 10 years apart if we wanted to use that course of logic. So with the COVID crash coming in 2020, we're probably still a ways away from another black swan type event bringing the market down this much. But just so we have that realm of possibility in the back of our minds, let's continue on with the example. So that COVID crash started on February 19th, 2020, when the S&P 500 was at 339.08, and then it dropped all the way down to 218.26, which is a 35.63% drop in just 33 days time. And again, that's the time frame that our current drop has been on. So if you can imagine almost a 9 times sharper drop over the same period, that's what that was. So that was an insane drop over a short period of time. And the S&P 500 equivalent for that would be 292.26, which we would have to zoom way out here on the y-axis to even get to 292. That's close enough down there. And that is a price that the S&P 500 hasn't been at for, if we probably go back to that 5-year chart, if we extended that left, that's a price that the S&P 500 hasn't been at since May of last year. That is the line that would represent an equivalent level COVID crash in the stock market. So do we think something like that's going to happen? Likely it will not happen, but again, something you want to keep in the back of your mind just in case that type of event does begin to happen, because there definitely is some middle ground between the first two that we've looked at and where that third line is for the COVID crash. But let's take a look at the fourth drop now that we have charted right here. And this is going to be on May 1st, 2019, when the S&P 500 topped out at about 294.95, and then over the next 33 days, again, same exact time frame as the COVID crash, dropped all the way down to 273.09 at the bottom for a 7.41% drop during that time frame. And this is probably the smallest drop of the pullbacks that we're going to be analyzing, being a 7.41% drop. So if we charted that equivalent drop with what we're looking at in today's market, that would be down to 420.04. So really the least severe of what we've looked at so far, and a price level that we're quite frankly not too far away from where we're at today. But let's take a look. I think everything we've looked at has been 33 days or less. What happens if there's a more extended pullback? For that one, we're going to take a look back in October of 2018. This is a pullback where the S&P 500 peaked at 293.21 on October 3rd, 2018, pulled all the way back to 233.76 by the end of the year. And that final candle that we see right there is going to be on December 26th. So a day after Christmas was when it made the lows. But that was good for a 20.28% drop over an 84-day period, which is by far the longest that we've looked at so far. So the equivalent of that would be if the S&P 500 made it back to $361. So that's what we would see if we had a similar pullback right there. And this last column that we have right here that we haven't really talked about is the as of date, and that's using that time frame to extrapolate to where we could expect to see if we had literally an equivalent drop for a percentage and time frame. And that would mean that we hit this level right here at 361.99 on November 25th of this year. So basically another month and a half, we would have another 16.42% drop. But another thing to keep in mind is that the front end of this crash right here happened pretty quickly as well, and then the back end of the crash happened relatively rapidly as well. If you compare that to with what we've seen so far, the front end happened relatively quickly. There was some chop in the middle, and then that would imply that we have this steep downward slide on the back end. But the front end of this slide is nowhere near as steep as the front end of this one that we've looked at, for instance, number 5. So I don't think that remaining 16.42% drop in the next month and a half is within the realm of possibility. But if we did take that 20.28% drop, this is where it would land us eventually. And that brings us to the final example we're going to look at, which is one from the beginning of 2018. And that is going to be one that started on January 26th, 2018, when the S&P 500 topped out at 286.63, and then over the next 66 days dropped 11.15% down to 254.67. So I think this one is probably a little bit better of a balance. We've had a couple like the COVID crash that are way too sharp. We've had some that are really sharp drops over shorter time frames than what we've seen on our current pullback. I think this one might be a decent example of where we could realistically expect to see if this is truly a pullback, because this is a 66-day period, meaning that the equivalent ending date for us would be November 7th, 2021, and that equivalent S&P 500 price would be 403.42. So if we plot that right there, that'd be 403.32, just below that 404.75 price we had from the second example. But that's about the range we would expect come November 7th if we mirrored that drop that we had at the beginning of 2018. So long story short, could the market just start going up from this point and we never look back? Absolutely. But when we trade, we always want to have potential downside in mind, because if we protect ourselves against that potential downside, nothing can go too terribly. And the potential downside for the S&P 500 over the next few months, if we mirrored some of the prior pullbacks that we've seen in the market, would look something like this. We could have a crazy instance where it gets down to 361 like we saw at the end of 2018, or if we mirrored the COVID drop, we'd be all the way down here at about 290 for the S&P 500. But with that in mind, is this a prediction that these are going to happen? Absolutely not. But like we said, it's something you want to keep in mind when you're trading, and hopefully this analysis of how low the S&P 500 could potentially go helps you planning your trading moving forward. So that's all we've got for this one. Thanks for watching the video. If you haven't, please subscribe to our channel, like the video, leave us a comment if you enjoyed the video. We've also got a Discord server that you could join for free. The link for that is in the bio. But until next time, this has been the Hourglass Trader, where as time passes, we make money.